Well, the geniuses at the Fed, they think they know how to tame inflation. Boy, have they gotten everything wrong so far. The rate hikes, they're causing their own economic problems. The 30-year home mortgage rate is now 6.29%. That's the highest it has been in 15 years. That's up from 6.02% just last week. The hikes will also slow down the economy and put a freeze on hiring, among other things. So what can us little people do to stop the bleeding? It's time for a tourniquet. It's time for Brianomics. Here with me in studio, Fox News contributor, professor of business and economics at the King's College in Manhattan, Brian Brenberg. Welcome back, Brian.
Hey.
Great to see you.
Yes.
Although these, a great deal of economic uncertainty, especially man, if you're in your 30s looking to buy your first house, good luck to you. Those monthly payments are getting to be utterly impossible.
Well, the average home price now is about $380,000. If you look at where mortgage rates have gone from the beginning of the year till now, that's going to add like $600 to $700 to your monthly mortgage payment. So you think about Miss McGillicuddy trying to buy a house.
She's trying.
Yeah, she's trying. She's going to be. I don't think she can afford that, Kennedy. New cars. You buy a new car, the average payment I think is up near $700 a month. That's like the old mortgage payment that you were making on your house, and now that's a new car payment. So, the president says inflation hasn't spiked. Well, it did spike, and the next leg of it is the interest rate spike that's going to cause all of these things to be unaffordable.
So what other unintended consequences will we see from higher interest rates?
Well, the biggest, and this is an unintended consequence, but it's an obvious one, the economy is going to slow down, and whatever kind of recession we're in now is going to get a lot deeper. And companies know this. Look at all the announcements they're making about hiring freezes and job cuts. And you can see them with FedEx because packages aren't moving. Goldman Sachs, love them or not, deals aren't happening. The Gap, shop there or not, they're laying off 500 corporate workers. What does that mean? These companies see what's happening. The Fed got way behind. They were thinking about climate change and DEI when they should have been thinking about inflation. They didn't, and so now they're ramping this thing up, and it means a deeper recession.
So around the start of the pandemic, rates were near zero. When should they have started going up? People like you, economists, when did you see an inflationary bubble brewing?
Sort of 2/3 away through 2021, it was pretty clear that this was ticking up, and there was nothing in the pipeline to help. That was the point when the Fed should have been laying the groundwork. And if you go back and look, that's exactly the moment that you started to hear words like, there's no serious economist who's worried about this.
Yeah.
It's transitory. It was so demeaning. It was so confidently wrong. And that's why they got behind. But again, it wasn't just because they missed it. This is what people have to understand. The problem is the Fed has given itself about 20 different mandates, and only one of them has to do with prices. All the rest have to do with things they can't control. And the Biden administration was encouraging it. They were throwing nominees up there for the Fed Board of Governors who really had no track record or interest in price stability. It was all about their social agenda, their ideological agenda.
Yeah, and that's why that mentality is very dangerous for society, because you need adults, you need propeller heads, you need mathematicians to keep the real economy working, because they have to understand it. I get it. Math is hard and it's boring. And it's much easier to be, all for environmental justice. But what you really need to understand are spreadsheets and data points. Because if no one's paying attention to that, and the people we're supposed to trust are throwing out terms like transitory, we all get screwed in the short and long term. So could you imagine if Alan Greenspan, he utters irrational exuberance, and the world falls apart.
The world goes crazy. If somebody said something like that, maybe, what is he talking about? That's not what we say anymore. We don't talk in those sort of technical terms. But I will add this to that. You got to understand math. You got to understand spreadsheets. But actually, the biggest problem right now with our economic and monetary authorities is they are so arrogant, and they think they understand much wider swaths of the world than they do. And so they look at their real job and they say, that's not important. That's not big enough for me. I have to promote environmental justice. Okay, that's a term worthy of my big brain. And the problem is they spend all their time doing that, and they forget that it's actually their day job that the little average guy needs them to do. And so they got to talk about environmental justice last year, and they're making everyone pay for it this year with higher interest rates and higher inflation.
Yeah, and shame on all of them. Janet Yellen, Jay Powell, they should all be out of jobs.
Right
Brian Brenberg will replace every single one of them. He is going to be the emperor of economics. Brianomics is now the law of the land. Thank you so much for being here. Always good to see you.
You bet.